Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today's Thursday, July 24th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Have a gander at this. We are sitting at the top of Friday's implied vol move. Okay. We have some technical divergence here. So my thought is a punch up to the top will likely fade. If I take a look at the bid-ask flow that I can see from my Motive Wave platform, which of course I also love madly, what it does is plot the depth of market onto the chart, and it's showing a big fat piece of the curve below before it bounces up. So we could have a flush down and then a flush up, or a breakout long that loses steam and comes back into the body of the price action. So that's really awesome. I've been really working on order flow because Coach Jack and Hogue, really guys on the floor for many, many years, just realized that the purpose of the market is to facilitate trade, and the trades will move in the direction of size, where the orders are sitting and ready to be fired off. So, I mean, I am so super excited about this. I can't even tell you. So more to follow. Hopefully we can get this on the Top Step X platform, and we'll be off to the races. But in the meantime, what we are doing is sitting inside of this zone. High opening range 6404.75. We've broken to the north of it a couple of times, but just like the framework suggests, we're going to pull back in before we give ourselves another bounce. And we've got this IV reading from 6401, so that's pretty important. Okay, what do we look for today? Well, it's still by the dip. We've got a lot of tariff stuff that continues to get fixed. We'll see what happens and how the market responds August the 1st. And, then we will take a look at movement to buy the dip. And so my thought is we've got jobless claims coming out. That's either going to give us a fade into 6,379 or so if we go into old resistance, and then a bounce back up, or, as I mentioned, a reflexive bounce to the north. Let's draw Fibonacci and see what that might be. We're doing it on the last wave. We could get to 6414 and then a fade, but look at that. Just like the depth of market showed, the pullback action really giving us, man, I love what we are seeing here in order flow. It's absolutely fantastic. Absolutely fantastic. So that being said, we're looking at a fade. Base of the fade, 63.91. It's going to get tough to go long right in this area if it does not hold, because we should be headed back to 63.79. All right, upward flow, 64.14, 64.21. Watch that hourly opening range, very congested. That's inventory accumulation. Base of the formation could give us the upward flow. And, yeah. Hang on 2 secs. Okay. All right, so let's move to the NQ. Got to go quick today because I just, I get up in the morning and I'm like, okay, I got to check out the news. I do read my Bible first, and sometimes I rush through that because I get up late and it always makes me feel guilty. But in any case, here we've got the NQ. I think Tesla did kind of badly. I think that's what I heard. Let me have a peek at the hourly formations. They are trying to buy the dip. I just saw 1,000 lot hit at 311. 310 is the floor. So I do expect buyers to come in here around the region of 23,350 or so. And that will bring us to our first opportunity to potentially buy. Notice the opening range high, 2300, 392.50. We broke the top of it and faded. Low, 23,364. Yeah, we broke the top of it, broke the bottom of it, came in, got to the top again, creating a lower high, and now here we are on the fade. What we do notice is the NQ is lagging the ES. And so I don't know if there's some kind of rotation shift floating around there. That is, that is pretty important for us to potentially consider to see if there's rotation going on here out of the NQ again. We've got a pretty big earnings week next week and into the rest of this week. So low edge of the range where the buyers will first start coming in anywhere between 23,369 and 23,349. Watch for the reflexive action there. It's going to be very, very interesting. If we lose it, fat part of the curve down here at 21,250. So we'll need to be careful if we're trying to go long in this pocket after all of this inventory accumulation fails. It should put us back in the base of the last area of accumulation. And of course, we do want to be careful to remember where the prior opening range formations sit, because, my friends, that has made a big difference in terms of finding support. Let's take a look at the YM. Wow, this one's really changed shape. My thought is that this would break down, right? So it did not. It's holding the upper edge of the range. It did hit the upward moves at around 45,110. It's now sitting at the base of old resistance. Buyers may try to come in here, but again, inventory accumulation was all the way down here between 44,865 and the value area high sitting at 44,807. Opening range for the YM. Notice how nicely that opened up a short, along with momentum that tells us, hey, you got some price action that should move to the north if it breaks through this level. But sitting down here, we can see from past exposures that we normally come down into the base of heavy congestion before we take a ride. So my thought is 44,865 to 44,810 makes a pretty good move to the upside rotation. Anne-Marie, but I want to go short. That seems like a pretty good trade. Well, what you want to do, sorry, allergies again. What you want to do is make sure that you take the bounce that rejects to minimize your risk moving downward, because it is a bit of a noisy patch in general. So there you have it for the NQ. Opening range levels: high 45,129, low 45,129. Did I say 4,529? Anyways, 45,071. Otter just will have a delightful time translating that one. Upward flow is possible, but again, the volume suggests we've got a little bit of noise in there, so you want to be careful. Let's look at micro Bitcoin. Certainly in the news, it's here to stay, because I heard a very funny comment pointed at the boomers like me, right? Well, I'm a borderline boomer, but I really am a millennial, but whatever. No, I don't know what I am. Maybe I'm a Gen X. Doesn't matter. I don't want to put myself in the box. I'll just say they're saying, hey, old people have jumped on the Bitcoin train, and so it's here to stay. I'm not going to deny that. Tons of ETFs. However, you just never know. So if we take a look at micro Bitcoin's opening range: high 118,855, low 118,155. Look at the heavy congestion. The best buys are going to be at the lows of this inventory accumulation, down here between 116,600 116,600. Wow, I can't even say numbers today. And 117,280, right? They are compressing, waiting for another move, but they are accumulating. Look at this volume profile event back here. They are accumulating inventory, right? So accumulation either leads to liquidation or distribution at a discount or distribution at a premium. I don't know which way it's going to go. So while I'm in there, I'm going to wait for the bottom, take the lows, and then move forward from there, right? Okay, let's move on. What's next? Oil. There we go. Oil, a little bit of a basing formation here, double bottoming with no real signal that the price action was going to hold there, other than accumulation, 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 break of all of the noise out in front of this very large opening range formation. And once it broke out, that's all she wrote. It moved from one area to the next, and then to the next. Man, I love trading. I do. I love it. And now we are in the gap. So what are we likely to do? Fill the gap? Potentially. Potentially fill the gap. Look at how tight the opening range was this morning. I mean, just a couple of pennies. Very, very tight. Whoa. Look at that. Opening range, high, $65.49. Low, $65.38. So 11 cents. Tests the low, holds it. Tests the low, holds it, and then skyrockets to the value area high. That looks like resistance today, but the dip will make for the buy zone that looks good. And I like that dip around $64.97. Okay? Really, really like that. Yeah, looks good. Dips or buys, unless we lose 64.81. And then, friends, we're off to 64. Do we know what's happening with oil? I don't know, but I can tell you, nat gas, we'll stop here for a quick sec because it's the bane of my existence currently. Nat gas is falling off a freaking cliff. Maybe it's because it's so cheap, they're concerned about, whether it's going to be a buy or not. But this concerns me. It needs to hold this floor or it is going to go back to 225 to 230 if we look at the technical structures, right? So it's got to hold here. And the traders know it. They're trying to buy this dip, but that doesn't look pretty good. They need to congest here and build a floor. Everything's been V-shaped for this chart, showing a lot of volatility. It's going to be super interesting what happens there next. Okay. Taking a look at gold. Now, as you recall, I talked about the fact that I believe gold was setting up a short, that it was moving up on a very big short squeeze. And indeed, the collapse has been absolutely incredible. Now, the only way you can really hold this chart and not fret about it is by carrying the micros, especially if you don't want to, put yourself at $1,000 limit of risk and so on and so forth. You really want to make sure that you get the best of what's going on in the chart and able to trade it. So beautiful trades with the micros. Where's the ideal area that breaks down? Here's the opening range. Super tight, broke it, retested it, could not get to the top of the opening range by 6 a.m. By the time 9 a.m. rolls around, it breaks that 3,433 area and boom, off to the races. Today, same kind of aggressive decline. Whew, I mean, if you're thinking long and you went long up here, you're sweating if you're trying to hang on. Opening range formation, high 3,401, low 3,394. And here we are breaking down into the original framework of Monday. Let's take a look at a 4-hour and see where these traders have been accumulating. Notice they're at the top of the value area high. If we bounce into 3,385 and we cannot hold it there, it's going to be another short. and it's going to be a short into the volume point of control, 3,351 to 3,345, and then potentially this volatility event at 3,337. Now, you might say, Anne-Marie, how can you be so positive that XYZ, blah, 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 right? I'm not positive. I'm just speaking from technical representation. What does this price action look like? And technically speaking, this is what we are anticipating. So the only difference between you, me, a $1 billion hedge fund, or anything else is how we manage risk in a trade. So if you're thinking about this, find yourself a lower high, take an acceptable risk, and trade it. If you're right, but your timing's wrong, you might have to get out and get back in. That's the name of the game, okay? Trading doesn't mean that we get everything right. I like to liken it to baseball, right? A guy at the plate who strikes out 3.5 times out of 10 still gets to the Hall of Fame. Trading's a lot like that. We get to manage the risk as we build our skill at the plate. All right? Okay, that's it. Let's get to SPY. SPY in a bit of a topping formation today. I do think the buyers show up sometime soon. Opening range for SPY. Notice this easily could get to yesterday's opening range, right? Down about here. Opening range for the SPY, 6,300. If I'm talking pennies. $634.53. Could you tell I haven't had my coffee? Low, $633.89. The break of this low. Watch for a reflexive run of stops and a move back up into the congested area. If it holds, along up into this area at 635. If it fades, watch for the price action to collapse. Watch for it to collapse. So there we have it. There we have it. Okay. If it fades, we've got a stair step down all the way to $631.77. It is Thursday high, $635.80 according to the volatility. So these guys are doing all right sitting inside of their range. They're doing okay. We'll see. We'll see what happens. Last thing we want to talk about is UVXY. This is the ETF that we're staring down. We want to see the traders try and hold higher every single day. It is making a brand new low. So before we decide we're going to hedge because the sky is falling, we want to watch this. If it continues to break the lows, folks, we are not in a hedging space. Now, it could be a gigantic reflexive move, but until then, we're going to have to sit tight. All right? That's it for me, folks. I will be on Lunchbox Trading and look forward to seeing you there. Take care, and I'll see you on the streams.